So I
Wow.
know you have
Okay.
some big news. So let's talk about it.
Yeah, no, we've actually got, in the last several shows, we've kind of talked about the developments that were coming that we really couldn't, come out with yet just because of disclosure requirements. But really, two big events that happened this week, both of which have been, several months in the making. The first one we announced Monday, which was a financing of 1.5 million Canadian, which, as we all know, the capital markets are extremely constrained in terms of access to capital right now. So it was a big win for our team, mostly just from the faith that the investment groups have in Grow Rogue and kind of the plan and the vision that we're laying out. Pretty much the access in the markets today is, mostly debt at really egregious rates with short timelines. I know a lot of the bigger companies taking on those types of deals tout the lack of dilution. But a lot of these companies aren't profitable and don't have a path to profitability yet. And the question will be is, as these maturities become due, which, we're seeing a lot of the issues around the convertible debt has been taken on where, that's really debt. It has a right to convert, but they're so far out of the money that it just doesn't make sense. So how will they be able to navigate through some of those structures? It kind of started with sale leasebacks as the capital markets constricted. Then it's gone to these debt deals. And so, while it's dilutive for Grown Rogue, we're looking at the long-term opportunity and really trying to build, a business that can be successful in the long term. And to get a partner like CGOC into our business, got a great relationship with their, Sean Conacher, their CEO, great guy to work with. He's got a really good vision around support of companies just like ours who have a West Coast focus. We're big believers in flower. It's still the dominant category in almost every state. And he loved our expansion, which is the next big news that we just announced this morning, which is we have signed an option to acquire a 60% interest in Golden Harvest, which we've been looking at the Michigan market for the better part of a year. We've gone through a couple different options, right? We've looked at an asset that was kind of a construct or design, construct, build, permit that had a couple dispensaries in Detroit and kind of like a grow facility. But the timeline to get those done was so long, and the cost of them was very expensive. We looked at another opportunity on the west side of the state that similar. It was design, construct, permit, and that was right when the capital markets started to compress, and there was really just a limited ability to access capital against projects that are not yet cash flow positive. And that's the beauty of the Golden Harvest project. They've been operational for over a year. They're fully licensed.
Great.
They're already producing product. They're selling flower every single month. And so Grown Rogue's really coming in with a great entry point, with a great partner. And as we go through the licensing requirement with the state, which is required for us to take actual possession of our 60% that the option allows us for, we're going to begin implementing our methods through a management services agreement. And so we're moving one of our, well, actually, he's our most experienced grower from Oregon into Michigan. Like he'll literally be there March 1st under that management services agreement. And the way we like to say it is we're bringing Oregon quality weed or Oregon quality grown in Michigan, right? Which is really what we're doing. And everyone knows some of the best cannabis in the world comes from the West Coast. So taking those methods and, the quality, the consistency, all the things that we've, really kind of specialized in and perfected in the Oregon market, and moving into Michigan is just a huge opportunity. And the prices in Michigan are 3 to 4 times what we have in Oregon.
Wow.
And we'll be able to produce it at the same price. It'll take a little bit of time. We might not be exactly at our price points in Oregon, but we can produce it for $500 or $600. Our Oregon pricing is around $400 cost of good, and we're selling it for $3,500 versus $1,100. There's just a lot more meat in the margin. So it's really exciting, and it's been a big push on our team, a lot of focus and effort over the last 3 to 4 months as we got this deal kind of over the finish line. Yeah, it's been a big week for Grow Rogue. Very exciting.
Congratulations.
Yeah, thank you.
So how does your business change now tomorrow? Now that you've got this deal in place, what's the next step for Grown Rogue?
Next step is really execution, right? So we've secured capital. right?
Yeah.
Which gives us a lot of stability in the Oregon market. Also our corporate overhead as a public company allows us to, infuse that into the Michigan entity that we're taking the interest in. But really the focus now comes on execution. I think that's what a lot of these companies have missed over the last 2 years. It's all been about promises and promotion and, things that we're going to do. And the investors today are like, okay, great. Are you doing it? And so, for us, we're very laser focused on our strategy of, we've established a base in Oregon that is, profitable in our state. It doesn't necessarily cover all the corporate overhead we have as a public company, which we knew we needed to scale. Michigan's going to provide that scale for us. And it essentially, it's going to double or triple our revenue based upon the pricing there. It's an 80,000 square foot building. So there's tons of room for expansion.
Great.
He's only got, our partner right now maybe has, I think it's like 10,000 square feet built out. So it's less than 15% of the total structure is built. And of that, there's only, 5,000 to 6,000 square feet of actual flowering canopy. And so we've got a lot of opportunity to even increase the scale there as we continue to expand into the open floor space that exists at that project.
What do you think about the market right now? It seems like it's never going to stop going down. Like, what does it feel like as a like? It's just weird. It's almost because the market's melting up. Like the overall broader markets are on fire, right?
Yep.
Every day the Dow Jones just keeps screaming. Even with like a world pandemic in the coronavirus, the stock market keeps going up. But for some reason, which is weird, right? But for some reason, the cannabis sector just won't get a break. Is this just manipulation at this point? Like, I mean, it's getting crazy. It's nuts.
I don't think it's manipulation. I think you've got a lot of perseverance in cannabis. You've got a lot of companies that overextended, and you still haven't seen the ramifications of that. And I was just talking to a guy about this yesterday where I said, it was maybe even this morning, my prediction is we're not going to see a true recovery until like third quarter.
Wow.
Right. So I'm predicting like sometime after the summer holiday, right? Because I think the investors have seen so much chaos, lack of performance, and other things in the industry, yet they haven't really even seen like, okay, which companies have gone out of business, which ones have gone bankrupt. And that's still coming. I mean, I don't know which ones it'll be. I mean, hopefully none, but it's just unrealistic to expect some of these companies that have really overcommitted have, poor business models with overwhelming debt and obligations that they can't deliver upon that'll navigate through. Now they're scraping and clawing and like pushing vendors. I mean, you've been hearing the stories, and I don't like talking about other companies, but like, MedMen's now offering to pay vendors with like stock, right? Like that means they don't have cash, but they've taken on obligations for product. And these aren't just like an attorney or an accountant. This is like providers and
suppliers.
Yeah. Right?
I told you that. Remember I told you that?
Yeah, that's right. We had the conversation.
I said 50 million. 50 million.
Which is hopefully it's not that big, but I've talked to other people that they have some big obligations.
Yeah.
And so they're stretching other people. So what you're seeing is this kind of downward spiral of like these big companies are now stretching smaller companies. And so I just don't think you've seen the manifestation of the chaos yet. And so I think people are still waiting. And my prediction is it's going to start coming. And, heaven forbid MedMen has an issue. Like I like that company. They've done a really good job of building probably the most recognizable retail store in the space, right? They're the retail experts. But they, like Aurora the other day, I mean, they had a $1 billion write-down.
Crazy.
$1 billion, like wow.
Yeah.
Like how does that happen? And I think when you hear stuff like that come out, the investors are like, whoa, this is still not stabilized.
Yeah, I think
what you're going to see is you're going to see a redirection of people looking at companies like ours who have a committed management team, right? Like I've got a bunch of my own money into this thing. Like I own a ton of the stock. Like it's not like I'm a management team where all my options are out of the money and I'm like, why am I trying so hard to make this work? There's no value. Like there's commitment in what we're doing because it's more than just making money. We believe in the product. We believe in the industry. We believe in the opportunity. And so it's companies like ours who are smaller, but really have the opportunity to build something in this industry that has long-term sustainability. I think you're going to see a shift of investor sentiment from these big LPs who, yeah, they have this massive scale, but they're like these lumbering like tankers. You can't turn them. They can't adapt. And the one thing I found in cannabis over the last 10 years, excuse my language, or at least 3 years of recreational is flexibility, because it is such a volatile market. If you can't adapt with the market, you're like in a really challenging position.
Oh yeah, absolutely. It's been very challenging for investors. Like, I'm an investor and I talk to investors all over the world, and everybody's down.
Yeah.
Like, everybody. And you know this because you're in the sector. So you talk to people, everybody's down. And I mean big money, like millions to some people hundreds. Like, that could be big money to someone, but like everyone I talk to, like 20 grand, 50 grand, 100 grand, 200 grand, 500 grand, 700 grand, 2 million. Like, I'm hearing it everywhere. I have a question from Steven Feldman. He says, can you ask why the cost of goods sold is higher than the revenue generated from those goods in the last filings?
Oh, good question, Stephen. So one of the things that the most recent filings you have is our Q3 financials, which we had there's really two answers to that. So one, they're a little stale, right? Because we're about to announce our year end at the end of February. Two pieces on that. Number one, the biggest one is we had a distribution component of our business, which was driving about half of our revenue. The problem with distribution, and we've actually shut this down, is because while it was great for revenue growth, you don't make any money on distribution, right? Like, your gross margin on distribution is like 20%. By the time you pay sales commissions, transport, logistics, admin, like, we were almost losing money on every transaction, right? And so we realized, like, that's not the best business to be in if we want to focus on profitability and our core competency. And so you see a lot of drag down of our overall gross margin associated with that distribution business in the most recent filings. The other thing, and again, this is way beyond my level of expertise, I'm not an accountant, and I'm definitely not an IFRS expert. You get a lot of biological control adjustments in the Canadian reporting requirements, which will affect your essentially your margin percentage. What I can tell you is that the gross margin of our products since about like August for our indoor and now moving into our outdoor system, we're anywhere between 60 to 75%. And that's gross margin, right? So our cost of production is significantly less than our revenue. As we focused on our core competency of flower production and high margin products. Again, that being said, that may not mean that when we report it under IFRS, which IFRS is the Canadian accounting requirement, we also do similar things in like US GAAP, which show more conventional, like, EBITDA and things like that are more, I think financially understood, which changes the way it looks. But margins are strong in our production, and I can't control what IFRS might do, but you should expect like Q1 of this year is a really, really good year for Grow Road as we've shifted the business model into more profitable products.
That's great. Now, can you give us an estimate of what type of revenues you can kind of guesstimate for 2020?
I mean, we'll be somewhere around 4 million for 2019, which is more than 2 times what we did in 2018. Correct. We expect a similar bump in 2020. A lot of it's going to depend upon how fast we can turn on and scale the Michigan asset. Granted, until we acquire the option after licensing, which will take 4 to 6 months to go through the state process, we can't technically report that revenue. It'll be like a pro forma adjustment. But the models that we built for the Michigan asset for 2020, it at least doubles our revenue. It might even be bigger than that. So maybe we're up in the $8 to $10 million range for 2020. 2021 should probably not see a double jump based on what's currently in our pipeline. But maybe another 30-40% above that. So we're very focused on the Oregon and Michigan market right now. Oregon is kind of, I wouldn't say capped out, but our current licensing and infrastructure has kind of reached capacity. We are looking at ways to increase our productivity inside of this state by acquiring additional licenses, mostly on the outdoor side. We're still firm believers that as deregulation occurs, controlling supply chain of low cost, high quality outdoor product is going to be a huge opportunity once we can export. But so, it's 2x in 2020, so maybe 8 to 10 million bucks. And then we'll see another kind of pretty sizable jump in 2021, mostly based upon what we see in the Michigan market coming up.
What do you think about the legalization? There's been lots of talk back and forth. Like, I heard something yesterday about Trump signing a bill to make it difficult to allow states to not be protected from federal. Like, what's going on with that? Can we talk about that? Like, that's a bad thing, right?
Yeah, I mean, it sounds bad, except for every president, even going back to Obama, has been trying to remove that rider from the Senate spending bill. And I don't spend a lot of time trying to understand the political decisions of our administration, especially the current one. It's we think cannabis is volatile, like that administration is also very volatile. I don't think it has any material effect on what we're trying to accomplish. The horse has left the barn, right? Legalization is coming across the states. The question now is not if, it's when full deregulation will occur across the U.S. I mean, again, like I was having this conversation the other night with a group of local, investors in this area, very wealthy folks in our region. And, we're talking about the fact that cannabis is still a Schedule I drug. It's up there with heroin and LSD and mushrooms, and which is funny because there's a lot of new work proven with psychedelic mushrooms.
That's right.
Like PTSD and other support, very interesting topic that I know some people are working on. But Schedule II is meth, cocaine. How can you sit there in any stretch and be like methamphetamine or marijuana? Marijuana is worse. It's asinine.
It's crazy.
There's a whole overhaul that has to happen with the way it's perceived, and it's coming. But these things take time. They don't happen overnight. There's time to get them passed through kind of the regulatory structure.
Can you tell the audience what your share structure is like right now?
So with the deal with CGOC, I think we have 95 million shares outstanding. We had 75 before their deal. We've got a couple more tranches that'll close with them. They'll add probably another 10 million. So we'll be up around, call it just over 100 million shares. Of that, CGOC will be a pretty large holder of that, who have a very long-term view of what Roanoke's going to do. And then a big chunk of our share structure is through the insiders. I've got still 30%, even after the CGOC investment. Some of our early investors who are very patient, haven't sold any stock yet, as they, are just looking at the long-term opportunity, it's probably upward around 60, 70%. And so our actual float is pretty small. It might be, 15 million shares is probably being traded around out there.
Wow.
So it's a pretty tightly held group. I mean, we've had people even say it's more like a private company that's public, just because of how tightly held the component is still. We'd like to get a little bit more variety in that, right? So that's why we're doing things like this, Rich, talking to you, trying to get some more retail investors to come in and believe in our story. But we don't have big overhang with big institutional funds who are sitting there and just sell. It's a pretty patient shareholder base who owns most of the stock.
If there's one thing you wanted the shareholders to know about this news that you just broke today, what would it be?
We're in Michigan, right? After a year, it's probably one of the most exciting states in the U.S. right now, just because of the price profile, the challenges in the markets, right, that we're seeing, right? Access to capital means the development will take longer, and it's a very restrictive state. So many communities in Michigan have opted out that the price regime in that state is going to stay higher for a much longer standpoint. And so now's the time. We're trading at 10 cents. We just announced some pretty big news that has a chance to double our revenue. Now's the time to start buying some GRIN stock, because with the financing, with this expansion, we're actually moving forward while a lot of companies are constricting and trying to manage what they've already put in place. GRIN's actually expanding. Hey, Rich, I gotta plug my computer in because I think it's gonna die. So give me just half a second.
Hey, no problem.
There it is. You're good.
So, people are asking, how can you be trusted not to sell warrants in the future? Because a lot of shareholders have been really decimated in the cannabis sector. Obviously, you said you haven't sold any shares. So you've been very, very transparent about that.
Yeah, like me personally, I think maybe what their question is more about dilution.
Yeah.
Right? How are we going to maintain it? And, we don't, it was a big internal struggle with us for this deal we took from CGOC because of the dilutive component. But it was the right thing for the organization. And I think shareholders can look at this company and me personally and going, Obi is still the single largest shareholder of this entity, right? Like, he's not in this to make a salary. Like, he wants to see return on that share price. And what better company can you align with when your CEO is your largest shareholder, has the best interest of both sides, which is how do you make the company better, which is going to return value to the shareholders, right? And I haven't sold a single share. We've been public now for 15 months. I've actually been buying more shares in the market. I don't know how many I've bought in the last 6-8 months, but I started buying more shares back in like July, when the market started to really, we started to see this compression. So I'm like, this is a hell of a buying opportunity, right? Like, my CFO is probably going to buy into this subscription that we just did with CGOC, right? Our internal management team is so excited about the opportunity in front of us. We look at this pricing today. We're a $7 million market cap. Like, that's nothing. We'll do almost that in revenue this year.
That's right.
But like next year, our revenue will be more than our market cap is today. So we're trading at a 2020 sub 1x revenue. And we're going to make money on that because we're profitable. It's, we're undervalued. Probably every company says that, but our mechanics and our structure is pretty easy to come to that determination.
Yeah, no, that makes sense. Your new acquisition here, you believe this is going to help you double your revenue?
I don't believe. Unless we have something that we're not foreseeing. Like, Rich, prices in Michigan are, our product in Oregon, too bad we can't ship it, would sell for $4,000 a pound all day long.
Wow.
Right? If we did $4 million in 2019, call it, we could do a quarter of that production and hit the same revenue. And we have a bigger building that is almost constructed to the point our indoor facility is, right? And that doesn't include like trim. Trim goes for these crazy prices. It's like $400 to $500 a pound. I think conservatively we should see a double of our revenue in 2020.
Wow,
yep.
That's impressive.
Yeah.
Well, Obi, you know what? Thank you so much for joining us today. Congratulations on getting the additional capital that you guys needed to continue to move forward in this journey in the cannabis sector. As a cannabis enthusiast, it's been heartbreaking watching everything just get destroyed. As a shareholder, it's been even more difficult.